The headlines scream of closures, layoffs, and plummeting stock prices. Businesses that once dominated their markets are suddenly gasping for air, collapsing under the weight of an economic downturn. Yet, in the very same tempest, a handful of enterprises stand firm, their foundations unyielding, their growth surprisingly uninterrupted. How do some companies not just survive, but thrive when the world around them is crumbling? What hidden mechanisms grant them this extraordinary resilience? For most, a recession is a brutal test of survival. For a select few, it's an opportunity. The difference lies not in luck, but in a deliberate, often counterintuitive approach to building a business. It's about understanding the core pillars that insulate a company from the volatility of economic cycles. Our journey begins with a fictional company, Sentinel Systems, a name synonymous with unwavering stability, even through the most severe economic storms. Sentinel Systems was founded decades ago by Clara Vance, an engineer who witnessed firsthand the fragility of critical infrastructure supply chains during minor economic fluctuations. Her vision was simple, yet profound: build a company that supplies essential components and maintenance services for public utilities, water treatment plants, power grids, communication networks. These aren't discretionary purchases, they are the bedrock of modern society. When a city needs clean water or electricity, the demand for Sentinel's products doesn't diminish, it becomes more urgent. Beyond securing essential demand, Clara built Sentinel Systems on a relentless pursuit of operational efficiency. Every process, from raw material procurement to final delivery and service, was meticulously optimized. They invested heavily in automation, streamlined logistics, and cultivated a culture of continuous improvement. This wasn't about cutting corners, it was about eliminating waste, ensuring consistent quality, and delivering value without unnecessary expenditure. Their lean structure meant lower fixed costs and higher margins, even on critical, often government-regulated projects. Then came the Great Contraction, a global recession that hit with unprecedented force. Consumer spending evaporated, investment stalled, and credit markets seized up. Companies across every sector began to furlough employees, slash R&D budgets, and desperately liquidate assets to stay afloat. The general sentiment was one of panic and retrenchment. The market landscape shifted violently, separating the vulnerable from the robust. Sentinel's competitors, many of whom had chased aggressive growth fueled by debt, suddenly found themselves in a perilous position. They scrambled to win bids by drastically undercutting prices, often compromising on quality or postponing critical maintenance to reduce immediate costs. Their focus became short-term survival, leading to a race to the bottom that threatened to devalue the entire industry. Customers, wary of instability, began to question the long-term viability of their suppliers. Sentinel Systems, however, held its ground. Their reputation for reliability, built over decades, now became their shield. More importantly, their disciplined financial management meant they had substantial cash reserves and minimal long-term debt. While competitors were begging for lifelines, Sentinel could comfortably meet payroll, invest in inventory, and even offer flexible payment terms to struggling, but essential, clients. This financial fortress allowed them to ride out the storm without sacrificing their core values or operational integrity. Their pricing power, often overlooked during boom times, became explicitly clear. While competitors offered unsustainable discounts, Sentinel maintained its pricing, justified by superior product durability, guaranteed service levels, and the sheer criticality of their offerings. Public utilities knew that a cheap, unreliable component in a power grid could lead to catastrophic failures. In a crisis, reliability isn't a luxury, it's a necessity, and Sentinel's pricing reflected that irreplaceable value, further solidifying trust with their clients. As the recession began to recede, the landscape had fundamentally changed. Many of Sentinel's competitors had either gone bankrupt or were severely weakened. Sentinel Systems, far from just surviving, had expanded its market share, acquired key technologies from distressed rivals at favorable prices, and deepened its relationships with clients who had witnessed their unwavering commitment. They emerged from the downturn stronger, more dominant, and more respected than ever before. Sentinel Systems' story, while fictional, illustrates a powerful reality: economic resilience isn't accidental. It's forged through deliberate strategic choices. Essential demand provides a stable revenue base. Operational efficiency ensures profitability even in lean times. Robust cash reserves offer financial agility, while low debt eliminates crippling interest burdens. And strategic pricing power, backed by undeniable value, ensures sustained profitability. These are not merely survival tactics, they are blueprints for enduring prosperity. To build a business that weathers every storm, look beyond the temporary tides of boom and bust. Focus on the foundational principles that allow true value to persist. For in the heart of every challenge lies the ultimate test of true business fortitude.